Good morning, traders. It is 8:02 a.m. Chicago time on Tuesday, the 20th of July, 2021. This is episode number 2037. Just a quick mic check. Just let me know if I'm coming across too loud, too low, somewhere in between. I'd appreciate that. Can never test enough. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. We're going to jump right into the convergent trading pre-market summary sheet this morning. And in it, we see that the market's in a risk-on sentiment. So we are positive the indices so far, but we're also positive the treasuries. At the moment, crude still taking a bit of a beating, expecting support here in the 62 area or so, trading at $66, down 0.56%, and that's where we stand this morning. So overall, we do have allocation to risk. We have climbed since yesterday's closing rally, and we are holding sideways in what is a balanced profile on the S&P 500. The quotes in front of you are in real time. We have a balanced auction overnight with an upward skew. We have volume that is pretty high. Volume is above one standard deviation, trading at 334,000 contracts currently versus 310 is the edge of what we would call normal or one standard deviation, looking back 252 days as a sample. The overnight inventory, 86%, also quite high. We're going to be looking for a reversion, especially in the S&P with a lower high. The range is well within normal. It's a pretty decent range for the overnight session, 24.25 points. And the point of control is at 42.75, which was, if you're a convergent trading member, you probably saw me post yesterday at the close that I'm looking for 42.75 to get tested, and I'm looking for 42.87 as a key test area above. And it looks like we traded a lot at the 42.75 to make it the point of control. What's important for today? Key earnings. Well, yesterday we had IBM, which showed a profit. So IBM has had a hard time showing not a profit, but showing an increase. And it came out with an increase yesterday, and that's carried into the stock. IBM is a large component of the Dow and others. And then pre-market, we had UBS, Travelers, Philip Morris, and Halliburton. After the market today, we have United Airlines and Netflix. What's key for the market? What are the key events? And event risk. Well, we still have this COVID-19 surge with the Delta variant as a concern. A lot of concern that this may cause a shutdown for some countries or economies. Major earnings continue to be coming in, and NVDA had a 4-to-1 split. We haven't seen a split like this in a long time. Had a 4-to-1 split, and the reason I bring it up is because NVIDIA is one of the largest components of the Nasdaq. It is part of it's one of the ends in the Fangman Plus index. And so it's important to kind of keep an eye on it, as it has an impact on how the NQ moves. Today, we're just, there's not much during the session. We're looking for API crude oil stock change at 4:30. We're looking for balanced trade out of Japan, exports, and monetary policy meeting minutes. And that pretty much wraps up what we're looking for today. What did we expect yesterday? Yesterday, I really was expecting it to make something of an attempt, somewhat of an attempt higher. Really was looking for it to push at least into the 85, 87 area, that area there, where we see a confluence of a zipper or a resistance, and we see full session VWAP in mid. And then I was looking for it to push through if it tests down and it ends up pushing higher. But that's not what it did. The secondary scenario is an attempt higher into that 87 or towards that 87. I was looking to sell short anything that failed to push through into the 87. Was looking for 36. Was looking for 36 on the downside. And what it did, in fact, is, here we go, in the review segment. A lot of rotations yesterday, pretty good opportunities. What it did is it pushed up to 72, was completely unable to come in and push hard enough to provide a pretty decent entry at the beginning. It didn't quite take out the overnight low and push higher immediately, and it ended up selling off. So with that, there were early cautions to the longs. And then we get this strong impulse down, and it's just looking for continuation trades. Pulls back to VWAP here, pretty decent trade. Posted about this in the Convergent Trading Head Trader channel as it was happening. Put in a higher low, and it came back through and pushed through the mid, and it kind of got murky here as we traded around, as we traded back and forth against the mid. We finally extend the IB, so we get the IB stat again, put in this murky low here, and then we end up running up. So this run up is actually relatively strong, but this low, I don't see an excess on this low. This low is relatively weak, but the thing is, this low is against a pretty important area. This low is right up against a single print from June, from a month ago, a single print from June, but it's a prior all-time high from May at 2275. But if I turn the master levels off, you'll see very clearly that this is a neckline to a major MC point of control area at 1875, 42, 1875 going down. And that neckline goes from 42.24 all the way to 03. I talked about this yesterday a little bit. This was an important area for the buyers to defend. So this is a high volume area. There's quite a bit of trading that occurred here about 3 weeks ago. And if we break through the 42.24, then we're looking for 18, and then we're looking for 12, and then we're looking for 03 beneath there as key test areas. Which one holds, whether they hold, we don't know. Nobody knows. But this was a kind of a last line of defense, last line of support before we start pushing through and getting into the 4200, and it was well defended. However, I can't say that I'm a huge fan of how this low was made because it's a double bottom, 42.04, 42.24 right there, 42.24 right there. This pushed up, came back for a double bottom, and squeezed higher. So this low is not a secure low. You can see it on the market profile right there. 2 TPOs. I don't know if you can see the yellow on gray, but 2 TPOs, period I and K, at the low at 42.24. This is a relatively weak bottom. So make sure you're aware of that. Make sure you've noted that. That becomes a key target on any selling from the prices we are at. Again, I was expecting it to push to 42.75 overnight, and then the next big area is 42.87. So here's how things played out yesterday. By the way, look at when Look at when the S&P, the minis crossed, the delta crossed. The delta crossed way back here. Let's go back. Right in here, right? So we had this move down, continuation, another move, continuation, and then the delta started going positive, which correlates with the open, which was at 66, and then the delta remained positive for the rest of the day as the market pushed higher. This is a bit of an interesting indication that there's some potential accumulation near those lows. Also, there were several sweeps in both directions. There was some higher time frame activity, and I'm talking about 2,700 contract sweeps of the market back and forth. We could see that the OTF, or the higher time frame, getting activated as the market continues down as an opportunity to buy lower presents itself. The close was quite strong. Look at this closing bar and closing delta, quite strong yesterday. And then from there, we simply floated up in the Asian session, pulled back, and then started floating up again. Europe started right here. Europe sideways and is pulling back and squeezing lower. We have a profile, as I said, that is completely balanced in this area, and it makes for a pretty murky open today, even though it is Tuesday. So the delta going negative, basically the delta is around zero. I'm expecting it to open at basically around the same price as yesterday, and the question is, do they come in and buy by seeing that this is maybe an excess low as a bigger picture? Now, with the understanding that this low is kind of weak, this may be seen as an excess low, and does it hold this to continue higher? That's what we are looking to find out today. So that's where we stand so far this morning. Let's take a look at what's expected for today. One thing we did is we left a pretty decent gap above. We started to broach the gap with the high yesterday at 42.72, the low of Friday of 43.14 and a quarter. That gives us a very wide gap zone, about 42 points of gap zone, with a gap mid at 42.93 and a quarter, with a point of control at 42.87. So this creates a situation that is somewhat interesting as we come into today's session here, because we have basically an unauctioned area above. And again, this is yesterday's high, right? We poked through yesterday's high by 7 points, got to 79 and a quarter. But essentially, this is yesterday's high at 72. Need to pay attention to this. And then beneath there, the next key area I had is in this 50 area right here. And I believe that today's action is likely to ping pong around this back and forth, back and forth. The key target remains 87. 87. We do have the mid, the gap mid right here at 93. I round the handles. It doesn't make a difference if it's 93 and a quarter, 93.50. Just call it 93 just for simplicity. And then once the 93 gets taken out, if we flop around the 93 and it doesn't get held down, if it pushes through the 93, you have 4,300, and then it's free to go to 43.15, which is last week's low, which was Friday's close. So there's a lot of opportunity if it gets back up above 72 and starts pushing higher, which is what I'm expecting. This morning, open auction in range. I'm looking for it to push back to the 50. Push back to the 50. Settlements at 51 and a quarter. 51 and a quarter, consolidate, and I'm looking for it to exit the 72 high, yesterday's high, and then start working its way to 87, consolidate at the 87, and look for 93. Although that's a lot of range, that's 40 some odd points of range, it's probably not going to get much past the 72 or the overnight high at 79 or so. If it gets to 87, I would be actually pleasantly surprised on the upside. That's scenario one. A pullback down into as far as 50. It might turn ahead of that. And if it doesn't, if that holds, then look for it to turn around, go to the 72, push to 79, and then 87 would be next. And that would be a squeeze. There's plenty of room for a squeeze here. We did almost 2 million contracts. In a day session yesterday, we did 2.5 million contracts in the full session in the S&P yesterday. There's a lot of volume yesterday and pretty decent volatility. The secondary open auction that drifts up into 72, unable to get out of the prior day's range. If it falls back in and takes out the opening swing low, looking for a short into 51.50, consolidate, and then start to push back down into the 42.39. This is 39 right here. And then that brings us to the week low at 24. Not sure if we're going to get to the 24 or not, because we would be pushing into 72, 75 to 24. It's 50 points. Again, I expect the range to expand, but not that much. So bounce back and hold steady into yesterday's range. That's scenario two. Okay, so again, we're opening in range, we're opening out of value, we're opening above the low volume node from the morning in the S&Ps, and so that's going to be the early important gauge as to how this thing responds right in here. Okay, so that area is the 60 or so. This is, we kind of want to watch how it treats that area as it comes in. We're trading at the 42.60 currently, so we're trading in the lower distribution already, and it keeps fighting back and forth. Look at this fight. Let's wipe this. This is fighting that area. There's the 42.60. This is the low volume node from yesterday, and we are just crisscrossing it right now. So it's very tough to read what this open is likely to play at or look like. So let's keep an eye on what it wants to do and respond accordingly. Good luck today, and I'll catch you tomorrow morning. Take care.